Hey everyone, Andy Moss here, tradingadventures.com with the weekly charts coming up on Sunday evening here. Thanks for sticking around and waiting for this. I've had a busy weekend, mostly outside with friends, doing lots of fun stuff. And so now we're back to the computer with a good connection and we can properly analyze the charts. And across the four major indices this week, we see a continuation higher, but with the context of a much smaller range. So looking at SPYs, another new high. They were up a bit this week and continuing higher. The notable thing here that sticks out to me is the RSI kind of broke this little bit of a trend and is making a new high relative to the recent action here. We're getting back up and testing these anyway. Another thing to point out that we've been talking about for a couple of weeks is the declining volume. So I want to point that out and remind everyone that volume may matter in some instances. It's a major component of the volume weighted average price, which we look at on a day-to-day basis and an anchored basis from previous times, such as this one here and this one here. But light volume does not mean prices cannot go higher. So there's your look at the SPYs. Qs also making pretty authoritative new high here, pushing the up Bollinger Bands, new territory for the RSI, the corresponding declining volume and still well below average, and a little bit of a smaller range than the last several weeks, but higher nonetheless as the strength continues there in the NASDAQ 100 index. The Dow 30 inside bar or an inside candle here. The real body of this candle is within the upper reaches of last week's candle. And what's nice about this, while this signals some indecision here, you might call this a spinning top candle if you're into patterns. But the notable thing is while it's slowed down, it held very well in the upper range of not only last week's candle, but this whole 4-week range. So strength continues there, albeit within the context of a little bit of a break there on the Dow 30 and Russell 2000, the IWM, another high weekly close here, and not quite an inside bar or inside candle there. It's a little above last week's close, but you can see the upward momentum is slowing down a little bit. And if you recall my articles from earlier in the week, which of course you can find right here on tradingadventures.com, we were talking about strong but not bulletproof, and the fact that the market was pausing, not breaking. Those were your intraday looks throughout the week there on the website. So that's the theme we're seeing largely play out here in the weekly charts as well, of course. Moving on to Bitcoin. Really strong week in Bitcoin. That range actually is expanding as far as the open to close, even though this is a 24-hour, 7-day-a-week market. There still is a open and closing time assigned to each one of these candles, and you can see the range here from top to bottom is, or bottom to top, I should say, is the biggest we've seen since this decline on week of March the 16th, and then the rise right before that. So Bitcoin is actually gaining some upward momentum here, but coming into an area that may be of interest. So far, too early to tell, but we do see a little bit of a pullback here from the upper shadow down into this area so far on Bitcoin, but it's getting stronger nonetheless. And up in the upper half of the Bollinger Bands, which are starting to compress a little bit here finally. Looking at the dollar, inside candle, below a flat 40-week moving average with the 4-week and the 10-week above. So no hurry for the dollar to go anywhere. Volatility continued to moderate. Another inside candle here within last week's range, and not really falling and not really rising, just holding steady there for the most part on volatility. International markets, we noted this trip to recent highs last week, and that was enough to add a little resistance this week. Now we have a bit of a negative divergence here on the RSI. You can see very clearly defined by the fact that this high at this moment in time is meaningfully low below this high as price holds about the same. So that doesn't predict future. It's just a notable piece of the puzzle. We've got the corresponding declining volume here as the all cap world index took a bit of a rest. It's still above all the moving averages, which are rising. It's in the upper half of the Bollinger Bands, very close to the upper Bollinger Band. So no alarm bells ringing there. All of the bullish structure is still in place. This is just a level of interest that is proving to be a perfectly sensible area for prices to take a bit of a rest. Looking at China specifically, guess what? Another inside candle. It is above a rising 4-week moving average and above a declining 10-week. Here's the flat 40-week. And this, again, diagonal trend lines, take it for what it's worth. This is just a visual reference point to show this has been a bit of resistance so far. The FXI ETF, and maybe it will be, again, who knows? It didn't get quite up to that level. It has been held back by the declining 20-week moving average here, which is the center line of the Bollinger Bands, and RSI hitting a corresponding reference point there on FXI. We'll see how that develops. Bonds, not quite an inside week here, but very close. Little trap between the declining 10-week and rising 40-week. No major resolution there in bonds, but we can point out that it's back to the second week here in this shaded area of price history. That's a little bit of a wide level or a wide range, but it has been important in the past. We're back to that level now. So bonds really, and it's talking about the aggregate bond index here, it needs to get up and through this. Well, first of all, these moving averages. Second of all, this shaded area of price, and then up here above about $155, $100.55, and get up here where it can stay. It has not been able to stay up there so far. So the first challenge is to get up here. The second challenge is to maintain prices up here. And we can note the RSI retracting from right about that 50% level, keeping it down in the what's considered the bearish lower half of the RSI range. TLT, Treasury bonds, very similar action, back to an area that was support for a while. Now it's been resistance for a while. No resolution there yet, but this index ETF is what I would call guilty until proven innocent. It's below the moving averages in the lower half of the Bollinger Bands with an RSI below 50, not a bullish structure there. In Treasury bonds, high yield continues to trade like stocks, as we always say, but not quite as much. It's more like the Dow in here than it is the SPYs or the Qs or the IWM. It's just barely above. Actually, the close might be just barely below this virtually flat 40-week, right in the middle of the Bollinger Bands, and trying to hold this. So that's the first step here, is to hold above this level, which is roughly $80.37 on high yield bonds. I'm going to skip past GSG and just go straight into crude oil. You guessed it, another inside week, which is a fairly easy accomplishment here after these very, very wide ranges we've seen in the prices of crude oil futures. So holding above a sharply rising 10-week moving average. The 4-week is just above this high of the week here, as represented by the long upper shadow on this candle. And there's an anchored VWAP from the breakout move back here. It's just about the middle of this range. So temporary or short-term, intermediate-term indecision here on crude oil futures as they resolve this incredibly wide range over the last many weeks. Gold, inside week, no change in gold. Silver, inside week, no change in silver. Moving on to some relative strength measures, as we do each week. Growth versus value, still moving in the favor of growth, but slowing down just like the overall stock indices. Consumer discretionary versus consumer staples, inside week, right at an area of some previous price memory, and holding this range very well. Here's 3 weeks of upward motion, and it's well within the upper reaches of this range. So not a bearish configuration, simply a pause in the action right now. The Bollinger Bands are compressing, prices above the center line, RSI for whatever that's worth on a relative strength chart. And high beta versus low volatility, we still see risk takers are in control. We don't see a lot of movement towards the more defensive sectors of, or the defensive allocations of the market, as the high beta S&P is much stronger relative to the low volatility version. Moving on to some individual areas of the market, the semiconductor index just incredibly strong here, 4 weeks up, and this range, or the range this past week, nearly as big as this range from a couple of weeks ago. New highs, that is now, let's just do a quick measure here. And from the low a few weeks ago to the high of this week, nearly 51% in 4 weekly candles on the semiconductor index. And that would suggest that the AI trade is very strong. There is still an incredible need for processing power and AI compute, as they call it. So very strong move there in SOXX, with RSI making highs not seen for quite some time, 81.22, which is higher than anything shown on this particular chart here. Biotech, inside week, trading above the 4-week, rising 4-week moving average, above this price area here, 134.79 cents, which is back from quite some time ago, just a intermediate high from a couple of years ago. And the EV software, not quite an inside week, but an indecision candle with a very, very wide range. Got a lot of reference points drawn in here. Chart's a little too messy, so we don't need to pay too much attention to those. What we can pay attention to is the rising 4-week moving average, the now slightly rising 10-week moving average, and the still declining 40-week moving average, which is well above price. That is the software sector. And then looking at Mag 7 names as a group, strong week, not quite inside, a little bit of a new high here for this range, and above all of the moving averages, which are now all rising. RSI up near 60, and volume about average here. The volume in these 7 names in particular has not been falling off like the indices as a whole. Looking now at the financial sector, inside week, right in the middle of the Bollinger Bands, below a flat 40-week, above a flattening 10-week, and here's the sharply rising 4-week. Energy names getting a little bit of a bounce as the crude oil futures settle down, and I mean a bounce relative to last week's close. We still have a couple of reference points here overhead to be mindful of in the energy trade. And now let's take a quick look at the Mag 7 names individually. Apple, indecision and a brief pause here right at a sensible area. Amazon, incredibly strong for the 4th week in a row, up to new highs over the extension level, and really no signs of slowing down yet. And what I mean by that is, notice this week closed a little bit off the highs, but these last 3 weeks, and this week in particular, it opened and climbed steadily all week long, closing almost at the highs of the week there on Amazon. Google, back in the winner circle, new highs on the weekly chart, and benefits of lots of demand there as the buyers maintain control. Meta, similar to Apple, indecision, inside week, right on a flat 40-week moving average. A little bit of a resistance area here, as we saw in this level, not quite reaching it here, but it reversed, couldn't get above it here. So this is a test. Can it get above this level and progress higher? We can watch this line. We can watch the closing prices of this candle a couple of weeks ago. We can then watch these highs. If this is going to make more progress higher, those are the levels we want to see taken out. That's the levels that we want to see price get and stay above. We want to see the RSI stay above the 50% mark. It couldn't hold it back here. This was early in the decline as it was getting into the bearish territory. So that's what's going on in Meta. Microsoft, very strong week last week, and a little bit of a pause here. It's not broken, but it's not all the way recovered yet either. Here's the anchor off of this high candle. We still have the center line of the Bollinger Bands declining here, and that's exactly where prices closed for the week, and the 40-week is coming down well above here. So plenty of work to be done yet on Microsoft to change this back to really bullish structure on the weekly time frame. It's a very nice bounce, but it's not out of the woods yet. NVIDIA, new highs. That is up in the area of this candle where it made an intra-week high and above this weekly close, which was the weekly closing high at the time. So NVIDIA coming along there very well, which makes sense given the overwhelming strength we saw in the semiconductor index. And Tesla reported earnings this week. And if you drill into the after hours action or the daily action, it actually got a very nice pop after the announcement. And then once the conference call came along, prices started to moderate, and it has reversed now from this convergence of a rising 40-week moving average, declining 20-week moving average, and this anchored VWAP from the high back in late December. So still work to be done there with Tesla. And those are the Mag 7 names individually. Now let's go first over to our bullish percent charts to check the breadth and participation levels. Starting with the S&P 500 bullish percent index, it's backed off a little bit here from this high level of 66. It's down at 62 to close the week, but not enough to send it into a column of O's. This is a bull confirmed status on the bullish percents as we see this recent 4-week reversal in prices also reflected in the percentage of index constituents that are on a point and figure buy signal. So good participation there across the index. Looking at the NASDAQ 100 names, similar situation. We actually got a buy signal here, a point and figure buy signal, as this column of X's exceeded the previous columns of X's. It's at 63 also, not enough to send it back into a column of O's. So this one is in bull confirmed status as well. And finally, we'll look at the New York Stock Exchange Index bullish percents, and no new highs here recently. Nice solid column of X's, but still in a consolidation pattern, and a bit of a reversal here, but not enough, once again, to send it into a column of O's. But without these new highs, this is still a bear correction status. So if you think about the Dow 30, expand that out to the NYSE bullish percent index, or the NYSE index itself, I should say. A lot of similarities there. So strong, but not yet breaking new ground. Now, finally, for the percentage of S&P 500 stocks above a 50 and 200-day moving average, notice, first of all, once again, here's the prices of the index going higher, but the percentage of stocks above a 50 and 200-day reversed kind of hard here. And that's not a technical term. I know that's a little vague, but it is what it is. We've got a bit of a sharp reversal here for the week. So a divergence there as prices make new highs. The percentage of stocks maintaining a 50 and 200-day moving average actually backed off there. So it's not broken. It's still above 50%. It's not bearish. It doesn't mean there's a massive correction or pullback coming. It simply adds to the case that we've seen across all these charts is stock prices are taking a bit of a rest if you take the time to look beneath the surface. So as some are looking at SPYs and Qs making new all-time highs and continuing to do so, we've got some indications here, as I suggested earlier in the week, that the momentum is slowing down. It doesn't mean it's broken. It doesn't mean anything that other than by some measures the buying velocity has backed off a little bit. And if you think quickly about the sequence of events, it makes perfect sense. We've seen this. Let me clean this chart up a little bit here and get a little better view. Ever since we saw the prices of the index futures get above the 5-day moving average, that was the start of the rise. We had the bottom here, it got above the 5-day here, it tested it a couple of times here, and then once we broke out above this consolidation that lasted about a week, it was off to the races, and we've continued higher. Now we have, for about a week, another consolidation pattern. Prices are on the S&P futures, at least, have staying confined to this range between, we'll call it roughly 7,080 and 7,180. So a little bit of a flag consolidation up here for the last several hours of last week, which is a good indication that it's poking its head up higher and could be a good indication that the rest is ready to give way to more upside, but would not be surprised after coming so far so quickly. Another trip back down here to the 5-day moving average, which is still rising, is certainly not out of the question. NASDAQ continues to make stronger bounces, and it didn't even, the range here was much more short-lived and not quite as neat. We continue to see a sequence of higher highs and higher lows, doing all the right things there, demonstrating once again that the buyers are in control. The Russell 2000 index futures in a range. We could draw a box around this for visual reference and just to indicate that, it's just not quite done consolidating yet. We talked last week about two types of correction: a correction by price, which would be a sharp pullback. So look at this area of extension here, for example. A correction by price, which we saw a little bit of here, would have been a sharp pullback, maybe back to the rising 5-day moving average, whereas a correction by time is where prices chop back and forth and digest while they wait for the moving average to catch up. So the only one that's showing an indication of more potential downside are the Dow futures over here, as they are now below a declining 5-day moving average. So buyers losing control on the Dow futures there, and a trip possibly down to, I'll blow this up here just to give you a little better look, a trip down to this anchor from the low on April 7th is not out of the cards. That would be the next level to watch for. We've seen a glorious run here, an impressive move higher on all the indices, but now if you look at what's going on in the Dow, at least, not across the board, but in Dow futures, we've got a series of lower highs and lower lows below a declining 5-day moving average. So caution there on the Dow 30. Looking at the same information with a little different lens, these are the index ETFs. Once again, here's where we got above the 5-day moving average. Here was the retest and another retest of a rising 5-day. And then we see here the consolidation period. In the last several hours of the week, we've got a very tight, very high level consolidation here, which is probing higher. So all of that is favorable for the SPYs. All of that is favorable for the Qs. The IWM is still undecided and testing a now flat 5-day moving average. And the Dow 30, as represented here by DIA, has a series of lower highs, once again, and lower lows below a now declining 5-day moving average. So there's the price action. There's the weekly charts. There's a check of the roadmap, which is always our early indication to why we look at multiple time frames, long and short, big picture, and zooming into the more precise, smaller time frames. Those are where we get the clues of what we might want to watch for next. And I use the word clue loosely. We're not trying to predict. We never know what's going to happen for sure. But if you follow the price action, you might get an idea of what the higher likelihood scenario could be, and work to position yourself in favor of that, or be ready for those, what we think of as higher potential outcomes. So what's going to happen next week, nobody knows, of course, but everything I just said over the last 3 or 4 minutes tells you what you need to know. The SPYs have an ES futures probing higher. Buyers are in control. It is a bit long in the tooth here on the daily and weekly time frames, but irrefutably strong. Worst case scenario, I would think from here would be some more pause, and once again, my preferred outcome would be a bit of a dip back into this extension level, this which was previously resistance. If we saw this retested and then a resumption of strength, I think that would be a very suitable buy signal to get long or longer for the next leg up. Always, the market doesn't care what we think might be ideal. I would like to see the same situation play out in the Qs, and we are cautious on DIA. A bit of rest here without an ability to even reach this level yet. Doesn't mean it's broken. Again, can't stress that enough. It's not a bearish chart. It just means that another week or two, perhaps longer, of some rest and sideways action should not be a surprise to anyone. So one more time, we got the correction by time, not by price. This is digestion, not deterioration. We have inside weeks across many different asset classes signaling that there's no urgency either way as people take a rest, as prices take a little bit of a rest after a massive quick move. Buyers didn't press, but they didn't give up control either. The only area that's starting to look a tiny bit cautious is the Dow 30. So leadership is continuing to work. Focus on the areas that are strong, look for your setups, and manage your risk. And that's how we'll play the market once again in the coming week. As always, you can see all of this on tradingadventures.com. The intraday or intra-week updates on Tuesday and Thursday is where we take a closer look and find all of that here on the site. Make sure you're subscribed to get the updates delivered right to your inbox. Thanks as always for watching this edition of the weekly charts and every edition as they continue to come out on the weekends. We'll see you futures open in about an hour for our first indication of what might be in store for the rest of Sunday evening and into the coming week, and then back in the morning with more market action.